Risk just got cheap again. The VIX collapsed to 16.45, down 6.8%, and a market that spent 2 weeks hiding in defensive sprinted straight back into growth to close its best quarter in 6 years. I'm Max Sterling. This is your StockStory market ritual, for minutes, the numbers, and what they're hiding. So here's the stakes question going into July: was the late June defensive scare a real top, or just a headline-driven flinch that the tape has now fully erased? Because if today's snapback holds, every dollar that ran to utilities and staples on the Iran panic is offside, and chasing growth back up here gets expensive fast. If it doesn't hold, this is the exact kind of quarter-end melt-up that traps people right before the calendar flips. One of those two stories is wrong by Thursday. Now the receipts. The Nasdaq led, up 1.52% to 26,213. The S&P added 0.79% to 7,499. The Dow lagged the pack, up just 0.26% to 52,319, and that gap tells you exactly where the money went. Technology ripped 2.76%, industrials up 1.35%, materials barely green at 0.34%. The other side of the rotation was brutal: utilities down 1.48%, consumer staples down 1.54%, real estate down 1.98%. That is a clean risk-on print, not a broad one. The chip story did the heavy lifting, the record quarterly rally that added $2 trillion in combined value to Micron, Intel and AMD, with Nvidia up 2.63% to $200.09. Ambarella exploded 28.04% to $85.80. The damage was concentrated too. Circle dropped 17.55%, and AT&T fell 5.13% on heavy volume. Which brings me to the scoreboard, and I have to eat one. Yesterday I logged that the VIX bounces back above 18 as the relief rally lost its headline fuel. It didn't lose its fuel, it found more, and the VIX printed 16.45. Clean miss. That drops the running tally to 4-7. I'm underwater, and I'm not going to dress it up. Here's my read. The sector rotation watch we've tracked for 6 straight sessions just resolved, and it resolved against the defensives. Money didn't rotate, it reversed, hard, and the VIX under 17 says the fear bid is gone. But notice the Dow only managed 0.26%. This is narrow-tech leadership all over again, the same thin, semiconductor-driven tape that cracked on June 23. I'm not fading it outright, but I'm not adding into tech up 2.76% on quarter-end window dressing either. What I'd actually watch is breadth. I want industrials and materials confirming, not just chips carrying. A rally only the Nasdaq believes in is a rally that's lying to you. So here's tomorrow's call: first day of a new quarter, fresh money in play. I think the VIX, sitting at 16.45, stays pinned under 17 at the close. The panic premium isn't coming back on day 1 of July without a real catalyst. Down 0-1 on this story, I'm logging it anyway. Come back and grade me. Same time tomorrow. Subscribe so the ritual finds you.